9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne with Annabelle Droulers.
We're counting down to the open of markets in Greater China, and our top stories this morning. Asian stocks defying a global risk sell-off led by cryptocurrencies. The yen holding advances following hints of a December rate hike from the BOJ governor.
Yeah, today's final JGB sale of the year coming amid a global bond sell-off with the risk of sloppy auctions could add to investor angst.
Also ahead, China Vanke asking some bondholders to wait a year for repayment as the distressed builder faces waning state support.
And Hong Kong authorities link last week's fire disaster to substandard construction netting, saying contractors deliberately evaded government testing.
We're taking a quick look at the market action this Tuesday morning, and I think it's kind of interesting. We seem to be coming a little bit full circle here because yesterday in the morning session, it was really that sort of risk-off move was sparked by this speculation of the BOJ looking to hike. The attention very much focused on cryptocurrencies going into the afternoon. But as we come into Tuesday morning, the attention is back again on what's happening with JGBs. Essentially, you're seeing yields there just moving fractionally higher, but a lot of that attention is coming down to that 10-year bond auction coming up later. It is the last for the year, and I love the way that Mark Cranfield from our MLive team puts it in a blog post, but he's saying that the timing of this final sale of the year reads like it's from the script of a horror movie.
Oh, gosh.
That's how bad it is, just the timing of it. But it's essentially landing in the midst of a major G10 bond sell-off. So it could actually end up becoming a global bond event as well. Or it is going to be a global bond event. So that's one of the main things we're tracking in the session today. But otherwise, you're actually seeing a recovery of sorts across the board here. The broader index is lifting up 0.25%. And you are just seeing perhaps a bit of a better mood than what we had yesterday in the session. But let's shift now and take a look at what we're expecting in terms of Golden Dragon Index performance overnight, because yes, you saw some upside moves, but one of the big decliners, and we will watch these names with the Hong Kong Open, but was the EV space in particular, because you had those car sales figures essentially seeing some weakness across the board. It's not just a China story. Actually, when you took a look at the Europe sales figures as well, still good numbers, but not quite as strong as the month prior either. So you did see, again, some of those names, particularly likes of NIO, for instance, down around 6%. But let's also take a look at setting up into the morning session today. Again, you're seeing futures here pointing to some modest moves to the upside. One of the things we're going to be watching at the open, of course, is China Vanke as well.
Yeah, that's going to be interesting, right? They're saying wait one year for things to kind of play through here. We'll see if investors are going to be enjoying that or liking that sort of news, given that there is still a lot of uncertainty around the property market. We're going to have Christy Hung from BI talking about this. And, people are liking this sort of crisis around Vanke to what happened with Country Garden, to what happened to Evergrande. She says maybe this could be looking a little bit more dire than those two previous sort of crises that we've seen. We'll ask her why in just a bit. But yes, as you talked about, at least things are stabilizing, right? Because we started to see this kind of cascading of dominoes when it comes to risk assets. First, it was really the BOJ, what happened to JGBs, and then crypto, right? But now, as you say, that bond auction in Japan could be quite telling here today.
I think it's going to be a really big one to watch. But I think also that crypto downturn, we're going to continue watching it really, because it's interesting. I think we might not even know the full extent of this, because one of the key metrics that traders are looking at is liquidation data.
Oh, yeah.
And that's how they're assessing leverage in the system. But the exchanges might not be fully transparent either on that exact data. So can you get the full sense of exactly what's moving or happening at the moment? But also, I mean, it sort of points to that bigger question. Are we going to see a Santa Claus rally?
Yeah, we thought that we could see a bit of that. I think when we were coming back and starting off the month in December, almost basically retracing or at least regaining some of the losses that we saw in November when it came to at least U.S. stocks and the like and risk assets. I think these wobbles that we're seeing when it comes to JGBs, when it comes to crypto, are certainly going to be something that are on the investors' minds. But you got to take a look at what's going to be happening, right? If we continue to see that Fed rate cut, that's going to be continued priced in. I don't think there's anything in the radar in the next maybe time horizon to kind of change investors' minds about how, the Fed's going to have to cut this month as well. So that certainly is still, I think, supporting the whole risk rally for now.
Yeah, and it's interesting as well because we actually have the Fed Chair, Jay Powell, just speaking at the Hoover Institution. So we'll get those lines to you as they come. But let's also shift back again to one of our top stories this morning, and that is Are we out of the woods here for crypto? Let's get more with our crypto reporter, Suva Ghosh, joining us. So, Suva, just talk us through market sentiment. We can see we sort of seem to have just be trading fairly steady this morning, but what are we expecting from here?
Hi, Annabelle. Yeah, you were right. I mean, it's trading steady today, recovered quite a bit from the bloodbath that we saw yesterday in the last 24 hours, actually. But the mood is still quite fragile, risk off as we started this month. We have seen nearly $1 billion of liquidations. 270,000 traders have been wiped out during these liquidations in just the last 24 hours. So mood is still quite bearish and cautious. There is an index called Fear and Greed Index, and the index is pointing at 23, which denotes extreme fear in the market. That also shows the mood that I'm citing about. And the other thing is, the liquidations. We have seen a lot of traders leverage their long positions and sit on stable coins. Stable coins are cash, are liquid. That also shows that traders want to sit on the sidelines and just reflecting the bearish sentiment in the market as of now.
Suva, what should we be watching out for? I mean, I think we're off like 30% from the October highs for Bitcoin, for example. What are some of the key levels and factors to watch out for now?
Indeed, we are. And Yvonne, the key levels for Bitcoin are around 85,500 on the downside, the key support levels. And if we break that, traders are saying that it could go down to $82,000. So, you can see that it's like small inches of downside risks that traders are bracing in. Still quite cautious and on the sidelines. On the upper side, also, traders are expecting just about 89,500 on the upside, which again shows the mood is pretty much cautious. Yeah.
Suva, thank you. Suvashi Ghosh there, crypto reporter joining us from Singapore with the latest. Of course, we'll get more on the forces driving the latest crypto crunch with blockchain platform provider OSL Group joining us in the next hour. Gary, too. In the 10 o'clock hour here. In the meantime, let's get you caught up with what this all means for markets as we count down to 2025 and the end of that. Let's bring in Thomas Taw, Fidelity's head of Asia Pacific ex-Japan ETF distribution. Tommy, it's always great to have you back in the program in a new firm as well.
It's been a while.
Welcome. And just tell us a bit more about, how are we looking at for year end right now? We're seeing a little bit of wobbles, whether it's in, bond markets and crypto. Are we still set up for a year end rally?
I think I'm going to be a little bit more of a Grinch on this one. It does seem like there's a little bit of rotation happening in terms of profit taking, but most of the moves in U.S. equities have been driven by earnings growth, right? So it's not really been a valuation blowout. So I think there's a little bit of trimming happening, particularly in some of the big risk-on type of movers. And then if you look at some of the sector flows from the last month, you see a big shift in things like healthcare, industrials. These are historically defensive names, but these are also kind of the one level down AI play. So there's also that underlying theme that's still going on. But it's been a very good and unexpected year, I think. If you look at the start of 2025, a lot of concerns about tariffs, inflation, rate hikes. Now it looks like the Fed's going to cut again in December. Everyone feels relatively good, but I think maybe some profit taking into end of the year.
How does that set us up then going into 2026? I mean, it seems like all of those fears that we had going into 2025, maybe you could just sort of kick into next year to an extent.
Yeah, well, I think that the overall theme is like set and forget doesn't work anymore. So particularly for that core U.S. equity holdings, still 70% of your underlying index. And so within that, how do you play around sectors? How do you look for income to diversify? I think the diversification is really going to be the main theme again into 2026. It's a little bit boring, but you have earnings growth, which have been strong, but earnings projections are coming down a little bit. And how do you diversify? You either play around in sectors or you look for things like income and dividends. And that's been a big trend over the last couple of months, particularly in the active ETF space.
Yeah, tell us a bit more of the active ETFs, because it seems like the landscape is kind of constantly evolving, right, when it comes to what you're seeing in Asia. How does it compare to maybe passive strategies?
So it's primarily being led by the U.S. at the moment. We're seeing very early signs of shifts to active ETFs in Asia. But essentially, you're looking for an active type of performance without the active fees. It's basically what it boils down to. And because you have this huge dispersion in terms of earnings growth, sector performance, economic performance. The need to get active has really come to the fore for a lot of investors. And so they're using an ETF wrapper. That's all it is, really. It's a wrapper. And the big trends, as I mentioned, have been into things like income, options overlays, dividends, these kind of volatility mitigation strategies. Because, again, if you're just holding a 70% of your portfolio in S&P 500, the dispersion is so much and the volatility is so much, and trading around eats into your performance. So active ETFs have been 40% actually of the inflow into ETFs this year in the US, which is a huge number.
You mentioned AI and the way that people are looking at maybe alternative routes for exposure to that sector. What does that look like, again, going into next year, and where are the ways that people can look to gain access, essentially? Yeah,
so it all started in semiconductors, right? Everyone thought, AI, no one really knew what it was, but, it's a big thing. CEOs are talking about it. And the obvious play was semiconductors in terms of a sector, hardware, et cetera. And now what we're starting to see is one level down. Okay, so where are the applications of AI? Where is the productivity increasing? And essentially it's moved into different sectors like healthcare and industrials. And then I think as we move into next year, it's things more like cybersecurity, innovation type strategies. But at the end of the day, this is still a big underlying theme, and you see a proliferation of products, and we'll start to see a broadening out instead of just broad semiconductor sector type of exposures. But it is an underlying theme. I do think you'll see a little bit of profit taking in that theme into the end of the year, but it's still going to be a big topic for next year.
What we were just talking about when it comes to crypto, I mean, how are you tracking the inflows into Bitcoin ETFs, for example, now? It seems like there's more of a preference with maybe gold ETFs in some ways, that we've actually maybe seen that correction has recovered now when it comes to gold and silver here. Is gold still kind of the preferred non-fiat sort of asset class?
I think if you're looking at diversification, yes. I mean, recently silver's also been, and copper have been seeing a lot of inflows and a lot of strong performance. But I think the Bitcoin play and the gold play are a little bit different. Gold is being driven more by institutional investors and also sovereign wealth funds. Bitcoin is being driven more by retail investors. And so we've seen about $20 billion US go into Bitcoin ETFs this year, and about $5 billion has come out since the October 10th high. So that data is about 3 days old, so maybe we'll see a little bit more. But I think the question is being more asked, like, when do I buy versus, like, do I need to get out? But we're primarily talking to institutional clients. At the margin, we're seeing a little bit of inflows from institutional clients, but it's still mostly a U.S. retail play at the moment.
What is their appetite for it generally when you do talk to them? I mean, even if it is sort of incremental or small-scale investments?
With the institutional guys? The question is really, how do I size it in my portfolio? So, most of the usage of it on the institutional level are in multi-asset portfolios. So how do I put fixed income, equity, and some kind of alternatives in my portfolio, and Bitcoin is a part of that. Most institutional clients look at it like 2%, but that's a very rough number. So it really just depends on the client type and where actually they're sitting, and if regulation actually allows them to buy spot Bitcoin ETFs.
All right, Tommy, we'll have more from Tommy Tao there, head of ETF distribution, APAC ex-Japan at Fidelity. He is staying with us. We've got an important interview coming up as well later on Bloomberg. We're going to hear exclusively from Taiwan's Foreign Minister Lin Chia-lung, with the island at the center now of a heated diplomatic dispute between China and Japan.
But first, Bloomberg learns that distressed builder China Vanke is now asking some bondholders to wait a year for repayment. We'll have an update on the property crisis next. As we count down to the open of trade in Shanghai, Shenzhen, Hong Kong, futures are looking like we'll see some modest upside at the open. This is The China Show.
What to watch in your agenda here today? That John Lee briefing is happening just a couple of moments, and according to local media, he is going to be updating the media here when it comes to investigations around last week's fire disaster. So that's going to be one that we're going to bring to you, the latest there. And we talked about Vanke and property bonds as well. High yield spreads in focus after Vanke is seeking that 1 year delay. We'll get more details on that according to Artrista Law. And of course, in terms of sectors, we talked about those EV sales for November, which did look a little bit weak there. Airlines and crypto stocks are certainly going to be a focus given the slump that we saw Bitcoin and Ether overnight, and HIBOR as well. We did see quite a massive move there yesterday, so certainly we'll see what that means when it comes to Hong Kong liquidity and currencies and how that plays out.
Yeah, a drop of 190 basis points overnight. But you mentioned China Vanke, and as you said, it is that request to essentially have extra time, 12 months, to pay that December 15 bond or repay that note. But let's get more with our team here, because we've got China credit reporter Trista Shinyulo joining us, plus Bloomberg intelligence analyst Christy Hung joining us as well. But Trista, we'll start with you and exactly what this tells us. We had this, obviously, expectations, but now it's finally happened, and what do we understand?
Yeah, it definitely shows Vanke is under severe liquidity strains now, and I think the plan we are seeing about a 1 year delay is actually worse than lots of investors' expectation. And Vanke also have another yuan notes in over 3 billion yuan, coming due in late December. So right now, investors are expecting that yuan note will probably see the same treatment. And in overall, Vanke has more than 13 billion yuan note coming due by the end of next June. So investors are wondering whether what happened to other yuan note as well. Yeah.
Christy, you talked about in your latest reaction piece, I mean, it's a 1 year delay, and you're saying the impact from this could be even greater than what we saw with Evergrande and Country Garden. Why?
Right. So from a housing sentiment standpoint, I think incrementally speaking, this is less big of a shock than Evergrande and Country Garden when it happened. But the significance here is that Vanke is a state-backed developer. So I think with its failure to pay its bond payment, I think the significance here is that investors will start to worry, how safe are state-backed developers, including local government-owned developers or centrally owned developers. How should we perceive them? And I think that would change the perception of home buyers. Are they still confident in buying pre-sold homes from state-owned developers? So far in this year to date, state-owned developers, the sales are down 9%, versus private developers, they're down 29%. So throughout the crisis, state-owned developers, they're relatively unscathed, and the contagion has been contained in the private developer space. But I think with what happened to Vanke, which has the largest shareholder from Shenzhen Metro, which is a state-owned entity, I think this is going to be a tipping point for the market.
How does that then also play into what happens next if you have that fear that starts to spread and that risk of contagion? What are the next things that you actually watch out for?
Yeah, so next week, Vanke will hold meetings with bondholders, try to see their support for the yuan note, delays. So we will definitely watch closely about how much support they can get. If they cannot get enough support, it will be a default. And also, I think offshore bondholders are also watching closely on this because, offshore they have, over $1.3 billion notes. So they are watching closely about what's happening onshore and then how this is going to impact them as well.
What are people telling you about this right now? I mean, people are saying they're liking this to Country Garden, to like Evergrande. In terms of eventual recoveries, what sort of scenarios are they mapping out now?
I think right now the pricing already, pricing about the recovery rate, right?
Yeah.
And then I think investors are definitely, as Christy said, trying to reprocess what's the government stance on this property crisis. And I think right now it's actually Vanke maybe on their own to deal with this debt issue because previously always relied on its largest shareholder, Shenzhen Metro, and also the government support. But right now it's actually the moment people need to think about how they're going to repay those debt.
And then amongst all of this, we've had China telling stats providers to withhold key data on home sales. How does that also add to the level of angst, do you think, and why exactly is that happening?
Right, so it was a big surprise yesterday because the two private data providers have been consistently releasing this data end of every month. And now that it seems to be that there's more intervention from the government to try and control the narrative and shield homebuyer confidence. And I think from here you would possibly see more government actions to try and mitigate the impact on Vanke's debt crisis on the overall home sales market. But as I said before, there's limited ammunition in the policy toolbox. Mortgage rate and down payment ratios are already at record low. And also, you are seeing home purchase restrictions. They're already relaxed in most of the cities except a few. So I think what we can do from here is more limited.
What are your models and the like telling you about what November's data is going to look like then?
Right, so November data, what we had predicted earlier is an over 30% decline year over year, because last year, same time last year, we had a high base from aggressive stimulus policy, if you remember. And the data did came out and we had access to that, and the number came up to be a 36% year-over-year decline. We expect December to continue to have that kind of steep decline, which is important because year-end sales push is very important for developers to try and catch up at the end of the year.
Christy, thank you. Christy Hong there from our Bloomberg Intelligence team. Also, thanks to Tristy Xingyi Luo, our China credit reporter, on the latest when it comes to China Vanke. We're watching, of course, how Vanke is going to be, how the bonds are going to price, and the like here as well. We have seen, of course, some suspensions here all week, but here, the stock at least, we are seeing up about 0.9%. So maybe investors are at least reassured that there is at least a time frame here. They're talking about a 12-month extension to pay the bond, but we'll see how the rest of the market fares for that here as well. Pre-market is looking like this here right now for your Hong Kong markets, and obviously we're focusing on EVs, the like, given some of the softer numbers that we got in November in terms of auto sales. Hang Seng, though, is seeing that recovery. We're up 0.6% here. Dollar China, 707 levels. This is Bloomberg.
Less than 5 minutes to the open this morning. You can see here futures are looking like we're going to see some modest upside at the open. It sort of tracks what you've got for the broader gauge this morning, because you are just seeing a bit of a recovery of sorts. Yesterday, lots of tensions around or anxieties being fueled firstly by these expectations of the BOJ and their hiking path. But then in addition to that, you had the crypto sell-off in the afternoon that again spooked investors.
Yep. In terms of analyst actions, the EV sort of story continues on here. You are seeing price targets being cut a little bit when it comes to some of these EV makers. So NIO 8 shares maintain a buy at Guosheng Securities, but that price target has been cut as well. Same goes to when it comes to NIO for Citi there, and Li Auto, also a price target cut to 105 from Goldman Sachs here as well. In terms of stocks to watch, it is about the Macau casinos. That's something worth watching here today, given the numbers were actually pretty good, right? And usually November is a seasonally slower month there for some of these casino operators, but you got to add some of the freebies, the perks, the concerts, and really drew a lot of people to come and spend there as well. Even some of the big VIPs coming back here as well. There you go. Wynn Macau up more than 1%. The open is next. This is Bloomberg.
Welcome back. You're watching the China Show this morning, and we are counting down to the open of markets. We're setting up for, I'm going to say, for a fairly flat open today, but we do have, again, Asian equities just shifting a little bit higher as we get into Tuesday trading. Lots of things to track in China in particular, because you've got China Vanke, of course, that's going to be top of mind for investors. They've essentially delayed or looking to delay their bond repayments. But then in addition to that, you've got what's happening in the EV space in China, and you had a lot of those stocks under pressure in the US overnight.
Yeah, a bit shaky there when it comes to the ADRs. We have some price targets and that have been cut from some of the sell side here. So certainly that's one to watch when it comes to the EV outlook in China there. Now that we start to talk about consumption subsidies and the effects are starting to fade for the fourth quarter, that certainly has been reflected in some of the numbers that we've seen for November so far. You take a look when it comes to what we're seeing. We're slightly on the decline here right now when it comes to onshore markets here. Obviously, we're key to watch what copper prices are doing after the record sort of levels that we saw on the LME contracts as well. Silver continues to pull records there. We are seeing a little bit of a flatness there when it comes to copper prices, but certainly it seems like we are seeing when it comes to stocks a little bit under pressure here today. We're focused a little bit more on, really the outlook as well. Standard upgrading their China outlook for 2026 also here. So there is kind of signs. We have SocGen coming through Wei Yao with her report saying China is slowly emerging from that deflation trap. We're going to ask them what parts of the economy are they seeing that. Flip the boards in terms of what we're seeing in Hong Kong today. So we are seeing a pretty rebound, but I can say it's a bit of a tentative one after that sell-off that we saw on Monday, right? Where cryptocurrencies basically were plummeting 5-6%. When you take a look at how Bitcoin prices are, we stabilized now, but certainly there was sort of a domino effect. What started from the BOJ, I have to say, with Ueda, with one of the clearest signals yet that they're ready to hike rates this month. That certainly sent a whole kind of global bond sell-off here from JGBs all the way to Treasuries overnight. That seems to be at least looking a little bit better here now on this Tuesday morning. Hang Seng Tech, we're up about a fourth of 1% there right now. Really like the likes of Alibaba. Look at that. We're up 2% for Baba here right now. Meituan's heading the opposite direction. We're down to 1%. So extending those losses after those earnings that came out late last week as well. In terms of what we saw with the EV side of things, so we talked about those November sales data that we got. So BYD sales were the key one there, dropped for a third straight month as well. Interesting enough, you're seeing the stock actually up more than 1.5% here this morning. But it was kind of sluggish month-on-month sales numbers for the month as well. So analysts are seeing signs of weakening demand there, weighing on 2026 here. But Citi was saying overseas sales momentum for BYD at least did beat estimates. Perhaps that's why you're seeing it buck against the trend here amongst the EV space there. In terms of Vanke, we talked about they're waiting 1 year to be whole. That's what we hear from our sources here on this 12-month extension to pay that bond. It seems like investors in some way getting a bit more clarity. The stock is up some 1%.
Yeah, that's right. But you mentioned Stanchart turning more bullish on China. Actually, JP Morgan is another, again, that sort of revised their forecasts and their allocation to mainland equities. But we heard from the co-head of Global EM Markets Equity Strategy, that's Rajiv Batra, speaking yesterday with Haslinder Amin. Take a listen.
Definitely from here, we will be looking into spaces like tech. We will be looking in spaces like consumer discretionary, consumer staples, communication services, materials, because if anti-involution is a reality over the next 5 to 10 years, which will be supporting not just margins of my end buyer, but also will be supportive because your capacity and supplies will not be a big headwinds to you. So that brings even material in place. So you can see a mix of old and new economy that supports you.
Still with us is Tommy Ta, head of ETF distribution for APAC ex-Japan at Fidelity. We haven't really talked about your outlook for the region here so far, but certainly it seems like this is one of the few years that we've seen actually China stocks outperform the likes of the S&P. You could add Europe into the mix as well. Do you think that can continue for next year?
Yes, it's been a while. We've been waiting for a while. It all started in January with this kind of DeepSeek movement, and I guess the question is is this being driven by optimism of the underlying economy growing? I don't really think so yet. And I think you can see that when you look at the performance of the China tech names versus the real economy names in the FTSE 50 and CSI 300. So I think this is a little bit of a catch-up in terms of valuations, plus foreign investors closing underweights. I think this is still very much a beta passive story at the moment. And then I think next year we start to look into various sectors, single company names, where are the actual transitions around this tech trade going to happen? So I don't think it's really a real economy story quite yet. We can see that in some of the data that's come through that's been a little bit disappointing, but the PBOC still has some ammunition. So I think to answer your question, I do think the performance can continue into next year, particularly as some of the underlying data comes through a little bit more positive than what we've been seeing over the last 6 months.
So it is a beta play, as you say. Do you think it's the same sectors that have stood out for this year, that trend also extends into next?
I think you will start to see a little bit of rotation into some of the onshore names, which are more liquidity sensitive to what the PBOC are doing. But again, at the moment, this is kind of a valuation catch-up between US tech and China tech, and I think that will probably be the underlying theme. But as we move into the second half of next year, and the data starts to get a little bit more positive, then you see some shifts into the traditional old economy type sectors.
Yeah, you mentioned about that whole EM rotation. So outside of China, where else are you seeing the most inflows here right now?
So the interesting thing is it's very much broad EM. And November actually was the best month all year for EM inflows for ETFs. And I think this is basically, we're seeing a shift, I think temporary, but I think we're seeing a shift from EM ex-China, which was the big trade over the last 3 years, selling in EM ex-China, actually buying broad EM. And I think the reason for this is because foreign investors realize they need to have more exposure to China as the market cap goes up, but they don't really know what to buy. So they buy broad EM, which the constituents in terms of China are very broad across technology and some of the A shares.
What happens with other EMs, like Korea, for instance? That's another market that's really stood out.
Yeah. So I was away for like 3 to 4 months, and I came back and I realized Korea's up year to date almost 60%.
Yeah.
And again, I think this is coming from a very low base of where valuations were and where earnings expectations were. And it is still a big part of the EM index, right? So you're starting to see a little bit of rotation, I think, away from India, which is still the longer term trend, into places like China, into places like South Korea. And Taiwan is kind of continuing to chug along. I mean, that's been performing very well for a long time. So I think that the South Korea trade is a valuation catch-up plus rotation away from India for short term.
This week it's been about, I want to talk about Japan too, which has done well. But this week it's really been about the market really recalibrating around the BOJ ready to hike again.
Yeah.
What do you think of how that's going to play out across asset classes and for Japan?
Yeah, there's a lot of like once bitten, twice shy situation with the BOJ because they have talked about intervention, becoming more hawkish for quite some time now. They haven't really done it. But if you look at the underlying inflation numbers, they have been pretty solid. And wage growth has been very solid as well. And so the expectation for rate hike now in December is around 80%.
Yeah.
So we'll probably get a rate hike. Plus you have the Fed probably going to cut in December. So interest rate convergent. But I think it's more about the rhetoric of what WADA comes out with in a couple of weeks. Even if they do cut, like are they going to move to a hiking cycle, not a cutting cycle? Or are they just kind of one and done and we'll see how the data comes? Because that's been very much the rhetoric over the last couple of years. That obviously has an impact on Nikkei and broader equity markets. Interesting this year that Japanese equities are not being driven by JPY depreciation.
Yeah.
So it is a much more of kind of real story. And you can see that when you look at Nikkei versus Topix performance, because Topix has always been the driver because it's more sensitive to JPY. JPY has done nothing this year. I still think we'll probably move to more into the 140 zone next year. But a lot of it will depend, obviously, on what the rhetoric is in a couple of weeks from WADA.
It really hasn't, the yen hasn't really been to that go-to place when it comes to hedging. Now.
Yes.
Is it still sort of that haven status? Can it still maintain that?
I don't think we'll know until we get a sizable sell-off in U.S. equities, because the interesting thing is, and you can see this when you look at gold, is historically gold has actually gone down when U.S. equities go down because U.S. dollar is the safe haven hedge. I don't think that's the case anymore. So gold is continuing to go up when U.S. equities go down. And so what's the actual safe haven currency in the G10? It could be yen, but we haven't really seen much of a sell-off. So I think if WADA hikes in a couple of weeks, the Fed cut in December, and we get a little bit of a pullback, you'll see yen in the 140s.
What do you think investors are missing, or what do you think is sort of that outside risk that you see as well?
I think the outside risk is probably, I'm not going to go into the AI bubble story. I think that's kind of been overplayed. But I think the risk is still around inflation and also the labor market in the U.S. Because that's really what's driving strong performance and earnings. But the earnings picture can change very, very quickly. And so if earnings growth continues to move down, valuations go up, and then you see more of a risk-off type of market. I think that's probably the main concern at the moment. So things are approximately okay, but things are priced very, very nicely for moves higher.
All right, approximately okay. I like that. That's Thomas Dorr there, head of ETF distribution, APAC, ex-Japan at Fidelity. And coming up, we mentioned that SocGen call upgrading their view on China's economic growth next year, seeing a less drastic impact from the Trump tariffs as well. We'll be speaking with their chief APAC economist in the coming hour. A lot more ahead. This is Bloomberg. Well, we're awaiting a briefing from Chief Executive John Lee on this, but authorities in Hong Kong at this point say last week's deadly apartment block fire was accelerated by construction workers using cheap, substandard netting and evading government testing. Let's bring in our China correspondent, Min Min Lo. So, Min Min, as we said, we might get an update in the coming minutes from John Lee, but In terms of what we've understood so far on the materials that were used to wrap the buildings, what have we learned about the compliance measures in place and exactly what they were doing?
Yes, so the authorities gave a press conference yesterday evening at about 5 p.m. and they said that out of the 20 samples of the netting that they had collected at the site of the fire, 7 of them were not compliant. And they found that the contractors had wrapped the base of the buildings with compliant materials, and the higher floors, the harder to reach areas, had been wrapped with non-compliant materials that is about half the price of the compliant ones. So just to give you a sense of scale, the contractors had bought about 2,300 rolls of non-compliant materials and just 115 rolls of the compliant ones. So they saved in total about over 100,000 Hong Kong dollars at the expense of many lives that are lost, because the death toll has now climbed to 151. And the authorities have now arrested 10 people on top of the original 3, accusing them of manslaughter. They include contractors, middlemen, consultants. Some of them are now out on bail. Some are still in custody. But yes, the investigation is still ongoing.
You mentioned about the death toll has also climbed up. Is the search effort completed now? Are we likely to see more victims?
We could hear an update later, perhaps, because yesterday evening the authorities said they had completed the search of 5 out of the 7 buildings. So there are 2 more buildings that they were still continuing to search. So the death toll at that time stood at 151. Over 100 of those had been identified. The remaining ones are still of unconfirmed identities. And these bodies, they are found in the corridors, on the rooftops, in the apartments. And there are still about 40 or so cases of missing people. And the authorities said they cannot rule out that they may not be able to locate all of the bodies because some of them may have been burnt to ash. So obviously this would be something that would be very challenging for family members who are seeking closure from this tragedy.
Yeah, and one of the aspects which we've discussed before is just how regulators had issued repeated written warnings to this contractor about the fire prevention measures they were taking. What do we understand about how they would continue to issue these warnings, but the contractor, I guess, failed to heed them?
Yeah, we don't exactly have new details. We already know that the Department of Labor had visited the site 16 times and issued multiple warning letters, and yet, as you said, it seemed like nothing was changed. So on that front, we're still hoping to get more details. It also emerged that residents had filed complaints to the Department of Labor as early as 2024. And the Department of Labor did acknowledge that they had dismissed some of the warnings before. And later on, they said that some of the materials were compliant, and they cited documents provided by the contractors. And obviously, it is sometimes possible for contractors to use certificates that may not be the most updated, or that may not be actually the same as the actual material being used on the ground. So we're hoping for more information there. But meanwhile, the authorities had halted 30 other construction or net renovation projects around Hong Kong. 28 of those are linked to the company involved in this fire, Prestige Construction, and 2 others are also affected because they have found cases of non-compliant materials. And also, interestingly, we're getting local media reports saying that they have contacted providers of these netting and found that they're out of stock after the fire. And just walking around the city, I have noticed a lot of buildings take down their netting as well. And presumably they're taking it down either because they are being told to do so, or they're doing so preemptively ahead of more inspections.
Yeah, lots of question marks still to be solved on that front in terms of the materials that were being used. Well, that's an update there on really the worst fire that Hong Kong has seen in decades for the city. But that was our China correspondent, Min Min Lo. And in some other world news that we're tracking this morning, a survey shows that Chinese export controls are forcing European companies to rethink how they operate. The poll, which was released by the EU Chamber of Commerce, indicates that about a third of European firms plan to shift sourcing away from Beijing. One respondent also said that China's curbs will result in additional costs equivalent to around 20% of its global gross revenue this year. Russian President Vladimir Putin has signed an order allowing visa-free entry for most Chinese citizens. They're now able to visit Russia for 30 days for business and tourism purposes. Some categories, including journalists and students, still do need visas. Russia is also about to kick off its first sale of yuan-denominated sovereign bonds as ties between the two countries deepen. We're watching shares of Chinese airlines this morning. That's after CCTV reported that over 40% of planned flights from China to Japan in December have been cancelled. According to the state broadcaster, that totals over 1,900 flights. As sources earlier told us that Beijing had instructed Chinese airlines to reduce the number of flights to Japan through March 2026.
And later on, we'll be hearing exclusively from Taiwan's Foreign Minister Lin Jialong with the island at the center of a heated diplomatic dispute between China and Japan. Our very own Stephen Engel is on the ground there speaking with the minister. Here's a look at how Asian markets are doing as we go into that lunch break as well. We are seeing stocks edging higher here today, so a bit of recovery from what we saw on Monday. Kospi now inching close to that 4,000 level here. Taiwan also seeing gains of more than 1%. We're 200 points up for the Hang Seng here. This is Bloomberg. Let's take you to live pictures in Hong Kong right now. The chief executive, John Lee, is currently speaking to the media ahead of an executive council meeting. Let's listen in.
Their lives to make these miracles happen. And I would like to give my respect to all firefighters. I express my deep gratitude to them. I would also like to thank all personnel in different positions, healthcare staff. They made every effort to save the victims. Police officers were at the scene to maintain order and to support the firefighting rescue operations. They also collected evidence and helped with identification of bodies. A lot of frontline civil servants also worked hard. I also thank the enthusiastic members of the public. Different people have displayed the spirit that we are all one family and that we selflessly sacrifice ourselves and we were able to unite ourselves. The fire has already claimed 151 lives. 79 were injured. Among them, 40 are still hospitalized. The police have already ruled out a number of cases that are unaccounted for. They are now following up on 30 missing person cases. With deep sorrow, we, in the past few days, experienced pain, and the flags in a lot of government buildings were flying at half-mast, and we have set up condolence points in 18 districts in Hong Kong. Many citizens have been to Tai Po to lay flowers and mourn for victims. The government is making every effort to support the affected residents to help them weather the difficult times. The government has opened up centers to rehouse the affected residents from Vanke Court. 2,500 affected residents are rehoused at transitional housing units managed by the Housing Authority, as well as youth hostels and hotels. About 20 affected residents are still at temporary shelters. We have activated the one social worker per household scheme to support the affected residents. Also, 2 to 3 civil servants will help each household to provide support to ensure that each household will get dedicated support. We would like to help affected residents with their emotions, and we would also provide logistic support. I visited some of the affected residents at the transitional housing units. they are happy with the supplies and services as well as support provided to the government. I heard that there are fraudulent SMS messages asking affected residents or other people to provide information of their banking account. I told them to reach out to the social workers or those civil servants who are offering support to them. I condemn the despicable acts of these scammers. In terms of financial relief for each household, we are providing 10,000 emergency cash subsidy to the affected. Starting from this week, we are distributing $50,000 of living allowance to each affected household. For household with deceased, we are providing $200,000 of token of solidarity. We are also providing $50,000 to $100,000 to those hospitalized, $20,000 of subsidy for students as well as foreign domestic helpers who survive. The government will tide over the difficult times with them. The fire is ruthless, but there is love in the community. Universities in Hong Kong as well as different organizations are offering their helping hand to provide support to affected residents. The government set up the dedicated fund, and the startup capital is $300 million. It's the support fund for wrongful court in Taipei. We also received a large amount of donations from the mainland, and the accumulated fund and donations received reach $1.6 billion. They represent the love and aspirations of many. The government will make sure that all the donations will be spent on helping the affected residents to rebuild their lives and to weather the difficult times. I earlier announced the setting up of 3 working groups and task forces. One of the task forces is making every effort to make sure that we can hold the responsible people accountable. There is an interdepartmental investigation task force led by the FSD. It is investigating the cause of the fire. The police have arrested 13 people on suspicion of manslaughter. The ICAC has arrested 12 people on suspicion of corruption in connection to the maintenance works. People make premeditated acts and mix the compliant protective netting with the non-compliant one. Also, a large amount of styrofoam was used in the maintenance works, and it is a crucial reason for the rapid spread of fire. I hope that the police as well as the ICAC would work together on the joint investigation so that we can hold the people accountable as soon as possible. We will make sure that those who are responsible will have to bear the legal responsibility. I ask for a thorough investigation, and we should turn our anger and sorrow into power of reform. We have to hold those responsible accountable. We have to expose the truth. We have to do everyone justice. We have to make sure that the deceased can rest in peace and that we can give a peace of mind to those who survive. This fire reflects that there are gross negligences in different parts of the maintenance works. Mistakes were made, and we need a systemic reform. Issues include the following. First, standards were not met, and we have to make sure that there is a good regulatory system. Second, we have to make sure if there were transfer of benefits as well as conflict of interests, or whether there were any collusions. Third, on building maintenance works, we have to review whether the list of compliant safety materials is comprehensive and whether the tests are effective. Fourth, we have to review the roles of different regulatory bodies, including the government departments as well as the authorized professionals. Fifth, building maintenance works may involve bid rigging or corruption. Sixth, fire safety systems should be equipped in every building, and we have to look at who are liable for this. Lastly, seventh, we have to look at the responsibilities of different people, and eighth, we have to look at the level of penalty, whether they are sufficient. As we investigate the cause of fire in full steam in order to prevent the same tragedy from happening, I will set up an independent commission of inquiry to be chaired by a judge to investigate the cause of the rapid spread of fire. I will reach out to the judiciary and invite a judge to chair the independent commission of inquiry to study the detailed scope of work of the commission. Also, I'll make sure that the commission will work effectively and efficiently. For example, I will see what kind of information the commission will need in order to exercise their duty. I hope that we can give them as much support as possible so that they can complete the investigation in time and that it can submit the report to the chief executive to help with the reform by the government. Meanwhile, we will continue to make every effort with the relief work. We will not give up on any household. We will help all affected residents to rebuild their lives and homes so that they can get back to normal life as soon as possible. As we are at the critical juncture of helping the affected to rebuild their lives, we have to have the vision and we have to make sure that the community can operate steadily. I have already made the decision. The election was originally scheduled for the 7th of December and it will be conducted as planned. I have directed government personnel to help the injured as well as the affected residents. I set up the support fund and I encouraged donations for the affected, and I directed the personnel to help with the affected household, and I directed the efforts to make a comprehensive and thorough investigation. Next step, in order to prevent the same kind of tragedy from happening, I think we need reform. I thought about partners we need to take forward the reform, and the partners I need would definitely be legislative councillors. They have all experienced the fight, they understand the pain, they will work with the government to implement the reform together. They will help enact legislations to implement the reform. It is an important step for us to elect capable legislative councillors with aspirations in order for us to achieve the goal. We should not stop. We have to continue to move forward in order to turn the anger into power and energy. Conducting the election as planned is a respect to the spirit of our rule of law. We have set a date for the election, and the election has to be conducted as scheduled and as planned. Holding the election as planned helps stabilize the community and help us with the relief work to rebuild the community. Electing legislative councillors would help us carry out the important work that we need and to help us review the legal system. A lot of the work has to be done with the approval of funding by the Legislative Council. I think this is a responsible attitude that we should adopt. The newly elected legislative councillors, after experiencing the pain, before they get into the LegCo, for them, it would be an important mission. The new LegCo will, with the importance of reform in mind, will be committed to their work. This fire makes us reflect on our policies and our existing system. I hope the newly elected legislative councillors will work in their own positions and work with the government to take forward the reform.
We have lost many things in the disaster. We need to continue to advance. We need to continue to move forward. Difficulties will only make us stronger. Challenges won't stand in our way. They will keep us even more united. We must stay united, and we must rise from sorrow. We need to stand together. We need to show the solidarity of Hong Kong. We need to build a better Hong Kong in the future. Thank you. The floor is now open for questions. Please raise your hand and identify your media outlet when called upon. You are limited to 2 questions. The gentleman on the left. Good morning, Chief Executive. I'm from the RTHK. Director Xia Baolong visited Shenzhen to listen to your report. What does it mean? Did you yourself take part in it? Were elections and the fire covered? What messages did Director Xia Baolong bring to citizens in Hong Kong? The election will be held as scheduled. Members of the public are very busy supporting the relief efforts. Will it make it difficult for you to mobilize manpower of the civil service? Are you going to meet any challenges when it comes to manpower? Thank you. This blaze claims a total of 151 lives. This is of public concern in Hong Kong. The Central People's Government and President Xi Jinping attach a lot of importance to the blaze. President Xi Jinping also directed that all our efforts would be made to help in the relief efforts of Hong Kong. Director Xia Baolong fulfilled the instructions of President Xi Jinping in relation to relief efforts. The relief teams headed by Mr. Nong Rong was sent to Hong Kong. I'm very much grateful to the Central People's Government. I can completely feel the importance attached by Director to Hong Kong. When it comes to the supplies and support of supplies, with the coordination of the Hong Kong and Macau offices, 2 batches of supplies have arrived in Hong Kong. In our firefighting efforts and in the identification of human bodies, lighting system, drones, or even in the healthcare aspect, medical consumables were provided to Hong Kong. These include medical supplies, tools, and so on. These show that the Central People's Government attaches a lot of importance to the relief efforts of Hong Kong. It also shows their all-out support. I talked to Director Xia Baolong. He recognizes our efforts. He expressed full support for our work. He will continue to render support in our work. When it comes to election, I have explained in full to the public. We're going to hold the election as scheduled. I have already explained the importance of this. I will advance reforms with my utmost devotion. Legislators play a very key role, so we need to return ambitious, capable legislators to implement reforms together with the government. This is very important. That's why we will make an all-out effort in our upcoming election. However, relief efforts will not be stopped. We'll continue to render support to the affected. We will only provide more support. There won't be less support. After we have finished the election, we can devote all resources and energy to help members of the public and the affected. So, alongside members of the public, legislators will also be involved. We need the approval of the Legislative Council when it comes to legal reforms, funding approvals, and so on. We have the principle of executive and legislature-led and interaction. We need to prevent tragedy from happening again. We need to build a better Hong Kong. That's why we will continue to hold the election. We won't pause any relief efforts. We will only move faster. Next question. On the right, the gentleman in light blue in the second row.
Two questions from AFP. So first, can you first confirm whether 3 people, including a student, a former district councillor, and a volunteer, have been arrested for this sedition? And if so, what did they do that was seditious? My second question is, over the past few years, you have spoken about leading Hong Kong from chaos to order and from order to prosperity. And yet this prosperous society allowed 151 people to burn to death. Can you tell us why you deserve to keep your job?
Well, criminals commit offense must be taken to justice. Law enforcement agencies, when they discover crimes, whatever their nature are, then they must be dealt with in accordance with the law. Whoever they are, whatever their background is, if their acts contravene the law, law enforcement agencies must take action, and they have a duty to do so. And I emphasize, I would not tolerate any crimes, particular crimes that exploit the tragedy that we are facing now. Societies, everybody in Hong Kong are uniting to help those who suffer to continue their living and face up to the future. Anybody who dares to sabotage this attempt, this commitment of society, we will do anything we can to ensure that justice will be done. Yes, it is a tragedy. It is a big fire. Yes, we need a reform. Yes, we have identified failures in different stages. That is exactly why we must act seriously to ensure that all these loopholes are plugged so that those who are responsible will be accountable. The shortcomings will be addressed. The bottlenecks will be addressed. And we will reform the whole building renovation system to ensure that such thing will not happen again. Nobody, of course, will want fire to happen. We'll do our best. It has been the effort of the government, of everybody in society, of everybody involved in this area to do their best. But fire happens in different cities, despite different cities' government and community try their best to do it. We will do our best to prevent it, but it is exactly what the government must do now to ensure that some system failure, which may have been accumulating over years, we need to strengthen the system. We need to reform it. We need to ensure vested interests will not be allowed to be a factor to cause this tragedy. There are a number of factors, and I have explained to you the different areas that we must tackle, the different issues that we have identified. We'll work on each one of them, not a single one of them, each and every one of them. And we're willing to listen to more views, opinions about what they have discovered. This will be included in the investigation and also included in the review to be conducted I just want to ensure one other thing. This is a time for everybody to unite for a good purpose. But for anybody who tries to sabotage the commitment of society, I will do all I can to ensure justice is done.
好，下條提問。
Next question. The lady in the last row in white. Yes. The second one. Good morning, I'm from Cable TV. According to the latest investigation, the non-compliant protective netting could not be easily reached. Does that mean these non-compliant net already got the certificates, and even by passing the tests done by the government, they may not be 100% compliant? And members of the public may have to exercise self-discipline in order to make sure that the maintenance works could be carried out properly. Well, does that mean there are loopholes to be plugged? And for the Commission of Inquiry, will the report on the investigation findings be released and made public? Also mentioned that the election will be held as scheduled. How come you do not invoke the relevant legislations to postpone the election? There is deep sorrow in the community, and have you considered the feelings of the families of the deceased as you decide to carry on with the election? According to the investigation, there are unscrupulous people who, in a premeditated manner, mixed compliant and non-compliant protective netting. I believe that among all
We're going to leave these live pictures there, but you were just hearing from the Hong Kong Chief Executive, John Lee, in this media briefing, and really talking about a message of unity and extending his, of course, support to the firefighters out there, but also setting out a big message when it comes to the need for reform. The government, they says, is setting up an independent committee that's going to be led by one judge to examine the cause of this fatal fire. Also, we're hearing a little bit more about the extent, of course, the financial aid is going to go as well. Let's bring in our China correspondent, Min Lo, with kind of the big takeaways from John Lee.
Yeah, I think one of the big takeaways is, he is going to set up the Independent Commission of Inquiry, and this is among the list of 4 demands that have been started by the person who was allegedly arrested based on local media for starting an online petition. Among the 4 demands is to start that Independent Commission of Inquiry. So John Lee is saying that, yes, they will have that commission started, led by a Hong Kong judge. He also talked about the need for comprehensive reforms. He talked about the need to look into whether there is bid rigging, there is corruption, also whether there is transfer of benefits, conflict of interest, and also to look into whether the list of compliant safety materials is comprehensive enough, whether the tests are effective, and really, a lot of changes that need to be made. And that is why he said that Hong Kong needs to move forward. They are going to keep that legislative councillor elections unchanged, because he says he needs the help of these legislative councillors to make the necessary changes to the law to ensure that such a tragedy doesn't happen again. He gave an update as well on the number of arrests. So there are 13 people now arrested for manslaughter. In addition, he said the Anti-Corruption Office had arrested 12 people on corruption charges as well. And interestingly, during the Q&A, we know that local media had reported that the police, the National Security Police, had arrested 3 people. One is a volunteer, the other is a former district councillor, Kenneth Cheung, and the third is someone who started an online petition. We were asking John Lee to confirm whether the arrests have been made, because this was reported by local media. He did not confirm that. And interestingly, I think this was where he spoke with the most conviction. Yeah. His voice became louder, and he really talked about the need to take to task all the people who are committing crimes and using this incident to exploit it and to sabotage the issue for their own purposes. Yeah, so national security clearly top of mind for John Lee as we look ahead to the Legislative Council elections, and of course something that Beijing will be watching very closely as well. And interestingly, he was questioned whether he should deserve to stay on as chief executive, but he didn't really answer that question as well.
Yeah, and interesting as well in that part of the press conference where he was talking about national security issues, that was the part that he broke into English in his response as well. So clearly sending that message quite wide. But we'll leave it there. That was our China correspondent, Min Min Lo, bringing us an update as we continue to see Chief Executive John Lee addressing the press there, answering some questions, but giving an update on the latest on the investigations into the Hong Kong fire from last week. So we'll have more ahead on the China show. This is Bloomberg. Quick check on markets this morning as we head through the session. It's really very much a tech story. You've got the topics there, or the TAIEX rather, over in Taiwan leading gains, but also the Kospi, another exchange that's doing well today, up 1.7%. So it is a tech leg rally, but also sort of just returning, I guess, some of that bearish sentiment we saw yesterday, and just, again, a bit more bullish, but a reversal of sorts.
Yep. And, we're focusing a little bit more on China there. Of course, SocGen has just revised its China GDP growth forecast for next year to 4.5%, saying that additional stimulus is warranted if Beijing is to aim for 5% again. Joining us now is SocGen's head of research and chief APEC economist, Wei Yao. We've certainly seen the November numbers have been quite soft here. Tell us about what's really driving that upgraded forecast.
Well, it's mostly a function of the fact that the trade has been quite resilient. Of course, this is not only a China story, it's a whole Asia, whole global story, actually. And there's a lot of element that, the AI capex boom is lifting all boats in terms of Asia exports. So China is actually benefiting from that indirectly as part of that supply chain. The other part is, there are still things really not working in China. For example, housing is actually falling at a faster rate. However, it's becoming smaller part of the economy. So even it's still declining, the drag is smaller. And also we see that the Chinese government now really have to step up on support. Of course, they actually have been stepping up, but they will have to continue on this path.
How does it work in terms of the investment side as well? Because that has been a bit sluggish this year. Do you start to see a recovery next year, and what would be the driver for that, do you think?
Right. The investment, some of the slowdown is actually for good reason, right? It's something we want to see from China for years, which is they need to constrain the supply expansion. They can't keep just occupying more and more space in the manufacturing world
and temper the overcapacity.
Exactly.
Concerns.
So in a way, it's slowed down for good reason. The more important question here is whether the government will reallocate this resource towards consumption, towards demand, that would make the economic model more sustainable. We definitely see the willingness, of course, but of course we need to see more action.
Yeah, and people question why Beijing hasn't put enough direct sort of support to the consumption space. It seems like the tech focus has been much more a priority, right? They're putting a lot of resources into tech sufficiency and the like, when you really could be putting that capital into maybe boosting pensions, for example. At what point do you think that might change?
I think that the change is already here.
Okay.
Right? You look at the 5-year plan, right? There are some subtle changes in the wording, which in my view is actually quite important. When they talk about investment, it's no longer about the size. It's about the appropriate level, being more focused on the frontier technology, on the things they really need. When they talk about consumption, they even mention the consumption share that need to grow, right? So in a way, the focus has shifted. I think, the tech focus will be there, but it's not about more and more capacity anymore. It's about the right thing, the most critical stuff.
Do you see then the goods trade surplus changing at any time, and do you see that reflecting more of rebalancing it all in the economy?
Most people are expecting a slowdown in exports next year.
Yeah, I think it's a bit inevitable given how strong it has been, right? Also, the tariff shock, it's better than people expected, given the tariff level right now. But nevertheless, this impact could still be there and drag down some other parts of the trade. But the thing here is that I think globally we are going to see some rebalance in terms of global trade surplus reducing on China's side and deficit reducing on the U.S. side, it's going to be a very gradual process.
You mentioned in your report slowly emerging from the deflation trap. Is it too soon to still call it reflation? What still needs to happen for that to happen?
So, the one thing they've chosen in terms of battling this deflation is anti-evolution, right? When you think about it, yes, indeed, China needs to do that, reduce supply. And then the missing part, or the part they need to do more, is to support the demand, right? So we're seeing the first part actually progressing faster than the second part, which results in this pattern of PPI recovering faster than CPI, right? So what we need to see is really genuinely more stimulus fiscal support going to consumption, going to social spending, which is starting but needs to go faster. Then we can see more really truly reflection in the CPI space.
So that's the fiscal side. What about monetary side? What do we expect there?
I think the monetary side, the challenge here is that the PBOC basically cannot ease much further in terms of lowering the short-term rates because of the profit margin of the banks, and the banks need to preserve capacity to work off the bad debt in the system. So they are pretty constrained. If anything, this interest rate subsidy to the mortgage potentially could be announced. Is maybe the path to go is more selective rate cuts in a way.
Wei, thanks very much for joining us this morning. That was Wei Yao, their head of research and chief economist for APAC at SocGen. And we do have much more coming up, taking a look at what's happening in the crypto space in particular, as we see a bit of recovery coming through in Bitcoin prices this morning, but a very significant sell-off and a lot of leverage bets also being liquidated. But we'll have more ahead. This is Bloomberg.
11:29 a.m. in Tokyo. Japanese markets heading to that lunch break in just a moment. You are seeing a recovery underway when it comes to equities there in Tokyo. We're up 0.4% for the Nikkei 225 here today. The yen also strengthened almost 1% overnight. So we're coming off that just a little bit, but we're still talking about 155.63 levels here as well. The next event risk is going to be that 10-year bond auction due later on today, which I think investors are going to be eyeing very closely, just given the sell-off that we've seen when it comes to JGBs of late, right? That 2-year yield is still above that 1% level here. So certainly we're still around those 2008 levels as well. Dollar yen, obviously, just given the move that we've seen as well as, investors start to really price in the possibility that the BOJ is ready to hike rates in just about 2 weeks' time.
Yeah, let's get more on that outlook now, specifically for JGBs, and bringing our MLife strategist Mark Granfield joining us this morning from Singapore. And Mark, I really loved the way that you put this in your column earlier today, but taking a look really about this sort of following the script of a horror story and something that risks becoming a global bond event as well. But tell us why exactly you see that happening possibly.
Well, the timing is very, very difficult. So you've had Governor Ueda setting up an interest rate hike for this month, which the Japanese politicians today did not push back against, which is very important, especially the finance minister. She said that policy is up to the Bank of Japan. So as far as investors and traders are concerned, it's pretty much a done deal. We're more than 80% priced for a rate hike in December. So everything tells you that it's going ahead. The problem from the bond market's point of view is not just about Japan, because the real interest rates are still running extremely negative. Even if the Bank of Japan raises by 25 basis points and we get to 0.75% on the official rate, that's still way below the inflation rate, which has been running around 3%-ish for a long time in Japan. So that doesn't help the bond market. And you can see the 30-year yields reached a record high today since they've been issued. So investors are pretty skeptical. On top of that, you've got the global situation, which doesn't help Japan at all, because it's been a rocky start to the week for G10 bonds, particularly because of heavy issuance in America. Lots of corporates want to get their bonds out of the way before year end. Markets will dry up pretty soon, and they've still got lots of debt to issue. So the whole thing is a very negative cocktail, and the yen is not helping either, because by now you would have thought, after what Ueda said, the yen would be much stronger. It's still around 155. So traders are not convinced.
Yeah. Can you tell? We just had Fidelity on Tommy Tom mentioned, if the Fed resumes its rate cutting cycle and the BOJ does in some way start hiking, that there's a chance that dollar yen could get to 140 next year. How likely is that scenario, do you think, here, given what you just said, that maybe there is kind of limited movement for the yen to strengthen from here?
For the yen to strengthen significantly against the US dollar, somehow the Bank of Japan would need to signal that after they raise interest rates, assuming they do in December, that the next hike after that to take them towards neutral rates is coming fairly quickly. That has not been the case under Governor Ueda. If they hike this month, the last one was in January, so that's like 11 months ago. That kind of pace is not going to impress yen traders at all. In fact, if you look at the setup, the way the options market was priced in January, it's almost exactly the same now in December. Option traders are not excited that the Bank of Japan is going to do multiple interest rate hikes. And that's what will be needed to make the yen a much stronger currency. Unless the BOJ can signal clearly that it's going to get to neutral rates quickly, then yen traders will just shrug their shoulders and say, here we go again, another long delay between interest rate hikes. Something will need to change quite dramatically. The Governor Ueda could signal that during his press conference at the meeting. He could make a change of tone, but so far that has not been the way he operates.
Mark, thanks for joining us. That was our Bloomberg MLive strategist, Mark Cranfield, there in Singapore. And let's take a look at cryptocurrencies, because we were saying really yesterday in the session, it was that story of what the BOJ was looking to do around rates. And then also it sort of morphed that sell-off mood into the afternoon with fears around essentially moves in the cryptocurrency space. And we saw quite a sharp sell-off in Bitcoin, ETH, but also those alt tokens as well. So you're seeing a bit of a price recovery today, or at least a stabilization. We can get more on the outlook. Joining us this morning is Gary Chu, is Executive Director at Hong Kong listed crypto exchange OSL. So Gary, I mean, as you watch that trading activity yesterday afternoon, of course, we've seen a lot of leverage bets being liquidated, really going back a couple of months now. But what were you thinking?
So I guess the key theme here, from a trader's perspective and a market's perspective, crypto is now a very, very interconnected landscape, right? So all the crypto traders, they don't just trade crypto. So what happens in so-called crypto land typically has a huge ripple effect throughout the general financial landscape. So I think you've already mentioned it, deleveraging, margin, and things like margin calls. Typically, that means movement of capital from one place to another. So on the one hand, we see assets like Bitcoin being highly global, price being generally, we see it as being highly transparent, but actually the liquidity pools are highly fragmented. So what it means is people with exposure to direct crypto, for example, through centralized exchanges, if there's another event happening, for example, in the equity markets that may have some impact on some of the indirect exposure, then immediate reaction is to move capital. So if we look at sort of some of the more interesting events like the MicroStrategy news yesterday, then immediately when traders have to react, that means they react in other places, not just the equity markets. So I think it is totally not unexpected to see responses happening through the ETFs. So when you've got sort of indirect exposure, but also in the spot markets. But then also in any of the thematic stocks, any of the other players that potentially may have sort of similar, may face similar impact. So a lot of the stories we saw in the last few months, for example, regarding digital asset treasuries, I think we have already seen some of the impact on those stocks. So generally, I think the key theme is sort of the interconnectedness of that capital.
Yeah. How do you think, because you mentioned that liquidity looks fragmented, and a lot of that data that you get on liquidation is also withheld from some key exchanges, and so it makes it very difficult to assess the leverage in the system as well. How do you think that maybe obscurity or non-transparency also creates fear in the system as well?
That's one way to look at it. I mean, if you're a trader, this is sort of like trader's heaven, right? So you see the ability to take exposure in a whole range of different venues, different mediums, direct, indirect, and also leverage versus non-leverage. And traders love that because the fragmentation means the room for arbitrage exists. So, for example, where you've got thematic stocks that potentially are being impacted by an event, you can take one position on the stock, you can take another type of position on the spot. Also, and we haven't even mentioned the derivatives yet, because the derivatives and also the leverage is where things like margin calls also start to bite. And the margin calls are the things that actually cause the very rapid responses, because you need to move capital very, very quickly. And the capital movement point is important when we look at the broader digital asset landscape, because it's not just trading a few day traders trading the occasional BTC. It's actually the movement of capital and how to move it. And it used to be the case that you move from one bank or one broker to another. Now it's also on-off ramp from on-chain to off-chain. So that brings in conversations like stablecoins. Why stablecoins as a topic is also becoming so interesting for the capital markets, because it affects the movement of capital.
A lot of it has been around what Michael Saylor has been doing with strategy, right? This whole kind of Bitcoin hoarding. You're wrapping around with the public stock by basically selling, the stock. A lot of retail investors were following that whole Bitcoin experiment and buying up a lot of these kind of strategy ETFs and the like, and are really getting hit hard right now. What do you make of this sort of controversial sort of way of dealing with Bitcoin in the public markets? Is this sort of business model sustainable, you think?
I think depending on different points in time. I think before regulated exchanges became widespread and basically a thing we don't talk about anymore, giving TradFi some sort of channel to get asset exposure probably was a good story. And so I think a number of years ago, if we wind back the clock, that story was very, very sexy, because a lot of financial institutions, the option of allocating assets to an asset class that fell outside the investment spectrum was basically not even on the table. But I think now that as I said, getting regulated direct exposure is no longer difficult. Getting indirect exposure via ETFs is, using the word difficult would be an overstatement. It is basically something that you already do. Then I think the DAT model, as a lot of people try, they gave it a fancy name. I think that model potentially, we'll see some evolution.
Where does that leave the price of Bitcoin? I mean, we've seen 30% losses since the highs that we saw in October. Have you seen any signs of a bottom being formed?
Look, I think in terms of longer view on that asset in particular, I think generally investors actually are quite enthusiastic. We are seeing a lot of actions where the market moves downwards and there are plenty of takers. So I think generally as an asset, not so much as an asset class, but as an asset, I think a lot of people are still holding a fairly sort of positive long-term view.
All right, Gary, we'll leave it there. But Gary, thank you. Gary Tu, they're Executive Director at OSL Group, joining us here in the Hong Kong studios. In some other corporate news this morning, Bloomberg has learned that Warner Brothers Discovery has received a mostly cash offer from Netflix as it fields a second round of bids. Sources say the offers are binding, which means the board can sign off on a deal quickly if its goals are met. Warner Brothers, the parent company of HBO, CNN, and its namesake film studio, officially put itself up for sale in October after receiving multiple unsolicited offers for all or part of the company. Airbus will inspect hundreds of its best-selling A320 jets for potential quality flaws in the aircraft's body, risking the company's last-ditch effort to meet its delivery target. According to materials from a presentation seen by Bloomberg, a total of 628 jets contain panels that may be either too thick or too thin due to a manufacturing issue at a supplier. Of these, 168 planes are already in service with carriers, and the rest are at various stages of production. And China's DeepSeek has launched 2 new versions of an experimental AI model. The company says DeepSeek v3.2 matches the performance of OpenAI's flagship GPT-5 across multiple reasoning benchmarks. It also says a new product called DeepSeek v3.2 Special focuses on mathematical computations and matches the performance of Google's latest Gemini 3 Pro. All right, we're checking markets here right now. We are seeing when it comes to the mainland, a little bit of bifurcation there when it comes to what you're seeing onshore. Onshore selling off here today, but Hang Seng seems to be on the mend here. We're up about 190 points off some of the initial highs from the open now, but it seems like tech is seeing a bit of recovery there as well. We're up 0.5%. This is Bloomberg.
In some world news this morning, and a survey shows that Chinese export controls are forcing European companies to rethink how they operate. The poll, which was released by the EU Chamber of Commerce, indicates that about a third of European firms plan to shift sourcing away from the mainland. One respondent also said that China's curbs will result in additional costs equivalent to around 20% of its global revenue this year. Russian President Vladimir Putin has signed an order allowing visa-free entry for most Chinese citizens. They're now able to visit Russia for 30 days for business and tourism purposes. Some categories, including journalists and students, still need visas. Russia is also about to kick off its first sale of yuan-denominated sovereign bonds. That's as ties between the two countries deepen. We're watching shares of Chinese airlines this morning. That's after CCTV reported that over 40% of planned flights from China to Japan in December have been cancelled. According to the state broadcaster, that totals over 1,900 flights. Sources earlier told Bloomberg that Beijing had instructed Chinese airlines to reduce the number of flights to Japan through March 2026. And indeed, today you are seeing these stocks all in the red by more than 2%.
Yeah, and certainly there's things to mind a lot of what's to come here if they're talking about for next year and some of those numbers as well. When you talk about what Bloomberg opinion and what they're saying here now, Karishma Vaswani has been talking about this and really saying that President Trump's peace plan for Ukraine will embolden China over the Taiwan issue. Karishma now joins us now from Singapore with more on that piece. Many have tried to kind of tie, I guess, the similarities between Ukraine and Taiwan. Karishma, how do you think, what lessons do you think China can take from the Trump administration's Ukraine peace plan?
Yeah, Yvonne, I think the first lesson that China is sort of taking from the administration's peace plan is that everything is up for grabs, right? Like when we first saw the sort of initial details about what appeared to be quite a vague peace plan for Ukraine from the US, there was a lot of confusion about where it was actually coming from, how many points were in it. And certainly this week, there is expected to be a little bit more clarity. But I think the big takeaway from that, certainly from scholars and academics that I've been speaking to, was that China saw an opportunity here in terms of the kinds of concessions that it looked like Washington was willing to give Moscow in an attempt to come to some sort of peace agreement. Now, this is something that has been expressed before, the relationship between Taiwan and Ukraine, most notably, of course, by the former Japanese Prime Minister Fumio Kishida back in 2022, when he talked about the fact that first Ukraine, then East Asia, in a reference that many took to be the kind of precarious situation that Taiwan could well find itself in if bigger countries are allowed to go in and sort of, find a way to challenge the sovereignty of other places and other territories. And I think this is one of the key concerns for Taiwan as it looks at what is happening between Ukraine, Russia, and the United States, but certainly opens a window of opportunity for China.
Karishma, we know, of course, the long-term goal for Beijing, for Taiwan, and that's reunification. But do you think what's happening right now and this prospect that we see a deal between Ukraine and Russia changes Beijing's calculations or maybe its timeline as well?
I think that the timeline and the calculations have always been pretty clear. If you look at the white paper that Beijing put out back in 2022 about how it sees unification with Taiwan, the line from the Chinese has always been that this is part of the plan, that it's going to happen either through peaceful means or by force, and it's a very clear roadmap as to how this fits into the national rejuvenation of the Chinese nation. It's part of Xi Jinping's legacy-making project. And I think what we've seen in the lead-up and certainly in the run-up in the last few years is that consistently the idea seems to be to try and take Taiwan without having to fire a shot. And what that means is, you know, increasing the kinds of military activities you see that the Chinese have been doing around the island, but also putting diplomatic pressure wherever Beijing can do that. You've seen the rhetoric against Japan in recent weeks, even with diplomatic allies that Taiwan has left, there is that consistent pressure. So I think that it doesn't change the calculus so much as it allows there to be an opportunity for China to see how is the US going to manage this peace plan with Ukraine and Russia and what that could mean for Taiwan.
And this is also coming at a time when I think President Trump is trying to seek a better relationship with China here right now. Where does that leave Taiwan? How has Taipei responded?
Well, in a really precarious position, and I would argue that it is in one of its most dangerous positions that we've seen in recent years. Now, what we've seen from the Taiwanese president is an announcement that there will be more money spent on defense, something like $40 billion. I think that is a very wise move. Of course, the fact that it has to go through a politically gridlocked parliament is going to be challenging for him, but it is as much a message for Beijing as it is for Washington. President Donald Trump has been ambiguous, I think it's fair to say, about his position on whether the United States would come to Taiwan's defense. I think there is a lot of concern in Taipei about this. And I think it's something that the Chinese see as an opportunity to exploit. As you point out, Yvonne, what Trump seems to be very keen on doing is cementing that relationship with Xi Jinping. There are plans for both leaders to visit each other's countries in 2026. And I think that politicians in Taipei right now are going to be looking at 2026 with a great deal of trepidation and concern.
That was our Bloomberg opinion columnist, Karishma Vaswani there. And on that note, we do actually have a very big interview coming up on Bloomberg as well. We're going to be hearing exclusively from Taiwan's foreign minister, that's Lin Chia-lung, with the island, as we were just discussing there, at the center of this heated diplomatic dispute between China and Japan.
Before we go, we're going to check some movers here this morning. We're checking the EV space. So some have come off some of the initial lows as well. But yeah, those November numbers were on the softer side. That's why Xpeng, NIO are down some 4 to 5% here. Interesting enough, BYD is bucking that trend. We're up about 3.5% or more. Despite the month-on-month numbers looking weaker, they talk about the export side of things that still look pretty strong, according to Citi, for BYD. Take a look when it comes to, of course, Korea. We're watching very closely. Samsung debuting its first tri-fold months ahead of a folding iPhone as well. So there you go. The stock is up 2.5%. Overall risk appetite is coming back. So the AI trade very much in focus here. That's why you're seeing SK and Samsung up quite a bit there. And that's lifting the cost beat to see back to around those 4,000 levels for Korea. So certainly that is one thing to watch here as well. This is Bloomberg.
I directed the effort to make a comprehensive and thorough investigation. Next step, in order to prevent the same kind of tragedy from happening, I think we need reform. I thought about partners we need to take forward the reform, and the partners I need would definitely be legislative councillors. They have all experienced the fight, they understand the pain, they will work with the government to implement the reform together.
Chief Executive of Hong Kong, John Lee, there speaking earlier about the need for this independent inquiry in the fire that killed 151 people, and certainly that message of reform was very much resonant in that press briefing today.
Yeah, absolutely. He stressed that multiple times that changes were needed, especially when you've seen this death toll just continuing to climb at 151 now. But we actually are taking you here to some live pictures. This is from a memorial site in Tai Po as the city continues to mourn the victims and as well to support the survivors of this. The government as well confirming that the upcoming LegCo elections will go ahead on December 7.